we want to be able to meet the industry where it's at. And it's not just the digital asset industry anymore. There's many different traditional financial firms that are starting to lever in these payments. And the question is, how do we do this within our organization? How do we do this in a way that's flexible and scalable?
Maybe this is where TradFi coming in, the likes of BlackRock and these other institutions, they help legitimize and change some of those headlines and also help establish an infrastructure to prevent the past problems that we've had.
Yeah, absolutely.
This episode is brought to you by iTrust Capital. iTrust Capital gives you a great alternative for buying, selling, and custodying your crypto assets. They allow you to set up a self-directed IRA, which gives you huge tax advantages. You can even roll over your 401k to this platform. And they not only offer crypto, they also offer gold and silver. And as mentioned, the custody gives you another very safe alternative. So many of you know about self-custody. That's a great option, but you can also use iTrust Capital's premium custody accounts, also known as PCA. So with the rise of crypto scams and phishing attacks, a lot of retail investors are losing their shirts. I mean, let's be honest, right? It sucks to hear that exchanges are getting hacked. Well, iTrust Capital does things a bit different here. They use Fortis Bank as their qualified custodian. So they're actually using a bank here, and they have partnerships with Coinbase, Prime, Fidelity, and Fireblocks. They are fully US based and their client experience team offers direct phone support. So not many platforms offer this. This is very unique to iTrust Capital. And folks, most recently, we heard from President Trump that the United States is looking to unlock 401ks to be able to participate in crypto. Well, you can get ahead of the curve by using iTrust Capital and getting started in that process. And folks, I'm a user of the platform. I have an account with them. If you sign up with my link, which is itrustcapital.com/thinkingcrypto, you can get an exclusive $100 funding bonus. So go learn about this great, safe, and awesome way to buy, sell, and custody your crypto. A great alternative, once again, with tax advantages and a lot of safety, very safe compared to many exchanges. And all the links will be in the description. Check it out. Hey everyone, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Glenn Morgan, who's the head of digital assets at Aon, which is a leading global professional services firm and which recently announced the first stablecoin insurance premium payment. Glenn, great to have you.
Thanks for having me, Tony. Looking forward to this. I've seen some of your coverage recently on stablecoins, so it seems like a very timely moment for us to meet.
Absolutely, and a pretty significant move here by Aon utilizing stablecoins. So I'm excited to dive into the details there, but I would love to start with your background. Tell us about yourself, where you're from, and your professional background.
Okay, yeah, great. So I grew up in Marietta, Georgia, right outside of Atlanta. I studied at University of Georgia in Athens. So Georgia Southerner at heart. But I shortly after graduating, I moved to New York, and I started my career in Atlanta, but then moved to New York, and that's kind of professionally where I began my career in crypto and everything else. So I guess from a professional standpoint, my background, I was in the risk management and insurance program at Georgia. They have a great school there, and so started my career at Marsh as a broker. And I guess it was really in round about 2017, where I was working in their private equity and M&A division. I was, I guess, some sorts of just like the Bitcoin water cooler guy. I'm sure you've known plenty of them. You probably were yourself, where you just want to talk to whoever will talk to you about Bitcoin. So it was a personal interest of mine, kind of on the side, but then round about 2017 was where we started to have, clients and relationships. I remember one, of note where a large private equity client we had said, "Hey, we have this, big institution who's starting this, crypto operation," which I'll leave names out of it for now, but and we have no idea how to talk to them. Glenn, why don't you take some of what you've been trying to talk to us about into this meeting? It being any type of like consulting, insurance, just corporate America in general is a pretty hierarchical industry. So I saw this as like an area where I could really differentiate myself, being that like any education back in the day, it was Twitter, it was Reddit, blog posts, kind of like uncredited educational resources. It's like this is something that I can really shine in, and it became evident that all the insurance aspects from a traditional standpoint already kind of made sense to me as to how things would fold in. But the more that I was talking to insurers, underwriters, and the businesses, kind of started to see that this was going to be a long road ahead. So dove in head first, and it was shortly thereafter, I get maybe 6 months, a year, where as soon as people started to see the size of the deals that we were doing. The crypto experts, so to speak, started to come out of the woodworks, and I was like, oh, I really think this is something that I've been able to differentiate myself in, been able to show leadership, and I really wanted to be able to own this. So I ended up going to a smaller broker and starting their digital asset division. Um, and at the time, interestingly enough, I was pitching Aon on the same idea. So, kind of to fast forward, I had kept those relationships alive, and about 4 years later, came over to run digital assets at Aon.
That's incredible. You were early advocate, helped to hit the ground running at some of these companies. And now I'm sure everybody wants to hear what you have to say because it's no longer taboo. It's no longer, a fringe industry or technology. It is what appears to be the fabric and rails of how money's going to move, contracts, transactions, and much more.
Yeah, no, it's an exciting time. I think that probably this, not to my credit, but somebody had recently described that this is the first cycle that we've had where it hasn't felt like, my God, something really bad can happen and like this could all go away. One thing breaks the wrong way in regulation, or somebody is doing something unscrupulous that creates systemic risk or exposure. Um, there's still things out there that are lots of concentrated risk in the industry, but we've seen it all before, and with the new like regulatory frameworks that are coming out, and the institutions that are and governments that are starting to get involved, it feels like, okay, well, the industry is not going anywhere, so let's just focus on how we can build and make this like safer for more participants to scale.
Pardon the interruption. Hi, I'm Tony. I'm the host of the Thinking Crypto podcast. I wanted to ask you if you can please support the podcast by hitting the like button, subscribing if you haven't as yet. You can leave a comment below as well. And if you're listening on a podcast platform such as Spotify, Apple, or wherever you get your podcasts, please be sure to follow and hit the 5-star rating. I'll let you get back to the content. Thank you so much. Yeah, and it feels like we've crossed the chasm with the amount of TradFi institutions that are here. They're further legitimizing the technology in the asset class. And to your point, with the Genius Act pass, we're on the cusp of getting the Clarity Act pass. Um, those those things are like pillars and really help these institutions and many folks to feel comfortable to adopt the technology and build with it. So it feels that we're at this tipping point. The legislation is certainly key.
Yeah, absolutely. And everybody's at a different path along their journey, right? And if we're looking at the landscape of financial institutions, I think I think insurers probably get credit for being just about the farthest out on the reactive scale. to things instead of the, proactive scale. For all that it's worth, they're taking, enormous amounts of risk and not really being compensated with the upside that the industry gets to see from this technology, in a lot of senses. So, getting comfort, getting regulation, getting education really helps to expand the amount of capital that's available to provide insurance for these organizations. And we've really turned a page in the last year and a half, and the way that it's being viewed by the industry, or at least my industry more broadly.
So give us a quick overview of Aon and all the services you provide for those who may not have heard of the company, and then we can go into the digital asset items.
Yeah, so Aon is a global risk management advisory firm. We're a broker. That's our core. So if you look at it like across, we have like major business lines: health, wealth, reinsurance, and commercial risk. And commercial risk is where we do a lot of our business and our risk advisory and our brokerage services. And so what digital assets looks like at Aon. So, normally I'd describe my job, I lead our book of business for crypto native clients in commercial risk, and then, consult for the crypto adjacents. And when you say crypto adjacents, there's different layers that we look at that. But I think the way that we would define it in an Aon sense is, businesses who are operating, either directly or indirectly in the digital asset arena and have a need for risk services. So, you know, some of what some examples of what we provide, engage with the industry on. Obviously you have your traditional suite of commercial insurances, anything from directors and officers, errors and emissions, cyber and technology risk, um, crime insurance, property insurance, et cetera. When we look at it like a little bit more tilted towards digital assets, you start to look in, to insurance for like the custody of digital assets, ensuring both like hot and cold storage. And we have custom facilities that are built up. And our cold storage facility goes up, into the billion and up to a billion. And then we have like, hot storage that, trails along with that, not as significant a capacity, but it's still meaningful for the industry. And then, things like staking and slashing risks, smart contract risk. And, something that's, been a much more recent theme is the DeFi vault exposure. People looking to transfer risk for that. Outside of that, it's also say another area that we get really involved is in, alternative capital and our captive insurance companies. So a captive, for, the folks that don't speak insurance, is basically like a self-insurance company. They can have, many different flavors. Like you can set up group captives, you can set up single parent captives. But what a lot of the digital asset industry, the larger, the larger balance sheets out there in the industry are using them for is to, one, it's to be able to insure risk where there's not capacity available in the market, so they can fill gaps that where there's deficits from traditional insurance markets if they need more limits, or there's maybe like certain aspects of risk that's not being insured. And then the other side of that is, you know we've been able to establish flexible collateral options and in what type of assets are used to back that risk. So, you're always going to have like your regulatory cap requirements, and depending on the jurisdiction, some people have been successful, um, you know, getting to use things like Bitcoin and stablecoins, Ethereum, to be able to actually be surplus capital for the risk that they're insuring. And, for example, if it's something like crime or, like custody, you're now providing capital for risk that is, tracks natively with the exposure. Now it's not like going to be, it's, the capital requirements are different, and it's not all going to be like exactly precise. But, a lot of people are sitting on large amounts of digital assets that are otherwise dormant. Providing those flexible solutions has been really impactful for the industry. And I think, kind of a like micro case for what we can start to see with insurance structures going forward. So those are examples of kind of like the product suite and some of the things we do for businesses. And then, the other hat that I wear is on the innovation side and looking at, what are we doing natively here at Aon that could potentially leverage, digital asset technology to be able to support our business.
And insurance is such a key pillar for an asset class to grow. I've talked about it over the years that the same setup that exists in TradFi needs to come to crypto, right? All the bells and whistles, security, insurance, and so forth. So certainly, you're providing one of the, as mentioned, pillar items here. What type of businesses, institutions are leveraging you? You may not be able to share names, but maybe the types. Are they hedge funds, exchanges, custodians that are leveraging your solution?
Yeah, so I'm won't be able to name any clients by name on the podcast, but I can give you kind of a framework. Like we're looking at everybody, and John Brosnan, who is the leader of our financial services and out of the UK, he wrote a great post today. It was, article for Aon kind of breaking down some of this. And I think when people look at Aon, they think this is a large global broker. We work with like, public or like really well-funded companies, people who are, massive or even like middle market bigger companies. But this is such a unique business class, and in the risk needs of people are still evolving and require so much like bespoke attention that we're looking at people like all the way down from pre-seed, up through IPO, public companies, et cetera. We do a lot of business with hedge funds. We do a lot of business with other asset managers. A large portion of our book, we have mining clients. We actually have a huge data center practice, but if you look at the miners specifically, like with their data centers, it's not just about like the some of the executive risks that we talked about. It's also like the property, right? They have large physical risk exposures, builders risk, in the construction and build out of these data centers, business interruption for, any downtime or other stuff. So we see those like more traditional lines coming into play there too.
So let's talk about the recent payment that was done via stablecoins, USDC and PYUSD across multiple chains. Tell us about the genesis of that idea and what's the vision there.
Yeah. So, this is something that's, been a long-term passion project for me, something I wanted to do a long time ago, but, it's the timing of things you need to get right, the people you need to get right. It's not easy to do something like this at a really large public company. So, you need to make sure that we're dealing with the right kind of regulatory environment, and we have all the things lined up internally. But essentially, like if we rewind, like I've had clients and hedge funds and stuff going back to 17, 18 that are wanting to pay us in Ethereum, and
Mm.
and in my younger years thinking like, hey, these people want to give us money. Why can't we take it? We should
Right.
be able to figure this out. But um, as things have grown and evolved, the business case and the reason for being able to leverage to leverage distributed ledgers, blockchain technology have continued to become more refined and purpose built for larger institutions, and so it's in part it's we want to be able to like meet client demand. We want to be able to operate in an arena that has regulatory clarity, and we want to be a leader within the industry that looking at, showing people that we can leverage like disciplined risk management internally and still participate in this, industry where we're looking at digital first financial models. And so, kind of looking back to some of the to where we were, probably sometime last fall, um, we had more and more, conversations with clients who are using stable coins for different use cases. Some of our clients are a stablecoin first business, and any transaction they can make in stablecoins, they will make in stablecoins. Um, we want to be able to meet the industry where it's at, and it's not just the digital asset industry anymore. There's many different traditional financial firms that are starting to lever in these payments, and so the question is, how do we do this within our organization? How do we do this in a way that's flexible and scalable? And what we've done here is completed a successful proof of concept. There's there's still, lots of work to be done, and we're the evolution is, um, you know, to be released, so to speak. But, I think what we wanted to show people with this proof of concept is that we're willing to work with our clients and meet them where they're at for flexible payment solutions. And at the same time, and all that we have to learn about stablecoins and payments, there's tons of stuff that goes on in the background, and it's a good exercise for us to start learning now, so that we're ready to scale when the business need is there.
Yeah, absolutely. And to your point, the puck is heading where many companies and firms are looking to utilize stablecoins, maybe launch their own stablecoins. So it's certainly important to get ahead of the curve here because there's going to be demand. You mentioned folks were trying to pay in ETH and other crypto assets over the years. A lot of that's going to shift to stablecoins. And it certainly makes sense to start establishing the infrastructure. I don't know how much you can share, as far as the test. I know Coinbase and Paxos participated. How did what were the logistics of that payment and, the back and forth, so to speak?
Well, I can tell you, it's going to be difficult for me to share some of the specifics, but what I can tell you is a little bit about, the process that we've gone through at Aon, which I think, like, other businesses can learn from. It's the payment itself is easy. When you finally get down to the time of like making making payments, um, that's not the hard part. The hard part is that there's so much, operational risk governance checks that we need to do internally to make sure that there's alignment across treasury, across operations, controllership, um, our finance and information security, um, legal, regulatory compliance, and aligning all of these parties with the same vision. It takes a lot of buy-in, and people are busy. So, how are you going to get them to spend time away from the many, many things they fill up their day with to work on a pilot, to work on something that's innovation, to work at some it's not necessarily like a direct, immediate revenue generating activity. And I think it starts, at the top with the tone and the vision that we've been empowered by our executive team to be able to authorize this proof of concept. And once they start to buy into the vision and trickles downhill, and people are a lot more willing to get involved and support. And I think that we turned a lot of skeptics initially into to when you see the whole value chain from start to finish and what we actually did, and what efficiencies it can provide. I think everyone here internally was very excited about the results, very excited about what they learned along the way, and definitely took away a lot of that. I would say initial hesitancy that was built on maybe just a lack of understanding and education. And I think we're sitting in a much stronger position to be able to, explore more, other opportunities in the future.
So it was reported that USDC and PYUSD were used across multiple chains. So I'm assuming as you continue to test the waters and you establish this ability to accept stablecoin payments, are there plans to expand to other stablecoins and other chains? Given that, look, this, I mentioned earlier, there's going to be a lot of people issuing stablecoins.
Right. And I mean, I think the key was, why we, use multiple stable coins, is we wanted to demonstrate like operational flexibility. It was very important. None of this really happens. I should have said this earlier, without the passing of the Genius Act. That's really where it becomes like, okay, this is here to stay. We're going to be, seeing this more and more from our customers, and we need to get prepared for what they're going to offer. But, I think, the theme there is that we said we wanted to work with, trusted uh, stablecoin issuers, trusted stablecoins that are following the PPSI, or the permitted payment stablecoin issuer frameworks that were laid out and established by the Genius Act. We wanted to work with trusted brand names that already have, like, established themselves in this arena, and with the support of these organizations who have already um you know been deeply ingrained and showed success in this area. It was made very simple and easy, to kind of a no-brainer to do it.
Yeah, for sure. It's amazing. And, to your point, the Genius Act passed, and it seems like the stablecoin race has kicked off where a lot of folks are looking to adopt stablecoins, looking to launch their own. There's talks of banks looking to do things like that. I think just earlier today it was announced that Wells Fargo, I think they filed for some patent or trademark around what appears to be a stablecoin. So it's very interesting.
Yeah, yeah. I mean, like, I do see, and you mentioned like what stable coins are on the horizon, or anything like that. I mean, I think that it's the framework first, right? Is we want to be able to meet clients where they're at. There's obviously other incentives for doing a proof of concept, right? Like this, like from a macro lens, we both know all the additional benefits that uh, stable coins could offer to an organization from a treasury perspective. From a payment, reduced exchange fees, etc. Um, or cross border payments being a huge one. But I guess the point that I'm making is that we still don't know how, we're still in a rulemaking period, and we don't know exactly which stable coins are going to become, the commonly used. Like, is there a stable coin race? Is everybody going to have their own stable coin? But I think that, when we fast forward, we're going to be looking at into a territory where it's just payments. It's just dollars, or it's just euros, moving from place to place, except it's happening faster. It's more liquid. It's not restricted to banking hours uh, anymore, and and people don't have to be necessarily a crypto expert to be able to transact that. But there's obviously lots of things that there's lots of complexities in getting these larger organizations and even smaller organizations set up to be able to transact with that. And I think even once you're ready to transact, it's still it's still a long road ahead in terms of, like, you know who actually wants to at the present moment. What's the business case for that, and what are we solving for? So, there still a lot of still a lot to learn on that front. But I will say that it's been a great exercise to be able to look at it, especially as a risk management organization, and practice what we preach. Is some of our clients and customers not only want to hear from us about why are we trying to transact in stable coins, but what did you learn about the process? Like, what kind of risks am I facing if I want to do stablecoin pays? What kind of insurance do I need for this? Like, are we covering? Are there any gaps in our ERM plan that we're putting together as we're trying to, you know, take on this new business line?
That's great perspective, and insights from the building side, right? Because it doesn't happen overnight. In crypto, I think a lot of people want things to go as fast as possible, but it takes time to build these things out and test it and have the right business use case and all of these things. In addition to the payments and leveraging stablecoins and the insurance you offer on crypto companies and assets and things like that, are you also looking at leveraging blockchain internally? Like putting, let's say, insurance contracts on chain. Is there anything like that on the roadmap?
So I think you can, there was an announcement back in 2014. We were working with an organization called Names, which is now rebranded to Onre. The idea behind that was to have tokenized insurance contracts.
Mm,
There's lots of stuff that goes into insurance that's not as binary as some financial contracts that some of the things that are succeeding in tokenization right now. It's not as easy as like burning and minting tokens. When it comes to the underwriting that goes into some of these policies, the complexity in the policy language, the claims processing, like I think a lot of people look at insurance and tokenization. One of the things that first things that people jump to is travel insurance.
yeah.
Your trip gets canceled, payment is issued. This is perfect for a smart contract. Why wouldn't we do that? I think there's some companies that do that, but if you think about like for example, a directors and officers insurance policy, it usually starts with a demand letter. Somebody alleging some sort of um, breach of contract or wrongdoing. That now there's going to be a 2-year long process, between insurers and lawyers and plaintiffs and defendants over what actually happened. Payments are going to happen in a slow drip. They might continue to increase. And, that kind of stuff is like, well, this, you know, policy is not really necessarily, best suited to be managed on chain for this. Um, so I think that, direct insurance on chain, it's, it's definitely coming. And there's things that we are looking at. One of the things that I've learned about this is immediately, at least for the environment that we're in right now, you'd want to look, if you are looking at insurance on chain, you'd want to have it like non-correlated to any crypto type risks. So, not having your on-chain insurance policy also tied to some sort of like on-chain activity. And that's why I think that like reinsurance markets will probably see those scaling a lot before like direct insurance market, but it's definitely something that we're keeping an eye on. I think another thing that we've started to see is in-kind policies. So where like policy limits, for example, a Bitcoin miner can ensure business interruption in Bitcoin because their exposure is like, a tornado comes through their facility, knocks off, a few of their machines. The business interruption is the Bitcoin that they can't produce until they get those machines up and running. So why not have, take out the volatility and have the in-kind insurance payment? And we see that, in certain insurers who've launched crime insurance products, like with, Bitcoin and Bitcoin limits. And we've also seen it with staking and slashing insurance in Ethereum because it's the same thing. Your loss is Ethereum, so why not have your policy limit in Ethereum? And there's certain DeFi, insurance organizations that provide some type of things like this, but those products are not regulated, so it's not something that we're able to offer to our customers.
I love the in kind concept, and that certainly makes sense. Um, With the rise of the tokenization market and a lot of different institutions are tokenizing stocks, gold, and other equities, um, have you seen demand for insurance for those products, or does it not really make sense? Because if there's already insurance for, let's say, the traditional version of a stock, do you necessarily need insurance for the tokenized version?
Well, I think the custody is where, the ball is moving a lot, and with real world assets, like, a lot of times there's other risk management um, tools in place to help, from a security standpoint or from a recovery standpoint, especially when the assets are being held safely off chain. Um, but I think that a lot of from a liability standpoint, a lot of the policy language and a lot of the products that exist are, in some ways already suited for purpose because they're meant to be, broad and encompassing of all sorts of financial management activities. And, I think, without getting like too technical on this, there's still exposures, but it's more about helping educate the market and getting them comfortable with extending their capacity for things that are relatively foreign to them. But I think that, around the transfer, around the like, I mentioned to you like the DeFi vaults that people are starting to set up, I think everybody the conversation they want to have with us is like, well, I want to get insurance so that my assets are safe. I'm worried about if this protocol fails. I'm worried about if somebody drains this smart contract. I'm worried about if someone steals our private keys or, a lot of times, funny enough, they say, I want to get insurance if I was hacked so that, and I lose my assets. And in insurance world, we've already crossed over two policies in a lot of instances because you have cyber insurers and technology insurers that are insuring liability for incidents like that. Sub for some first party cost, and then you have the crime insurers who are actually insuring for the loss of assets. But the intersection is that the trigger, the exposure, the way that the assets are stolen are coming from the cyber angle, whereas the actual event is a crime, and so it's difficult to get these insurers comfortable and on the same page. Thinking that the underwriting and the exposure sits on one side and the actual like value of assets is sitting in the other.
This is a weird question, but I'm curious about it. How many degrees of complexity is crypto versus traditional assets? Is it way more complex because you have all these intricacies of uh, private keys, DeFi, vulnerabilities, drains, hacks, and these things that can happen?
Well, I think it's degrees of complexity like more significant because it doesn't come from a like framework that people already know and understand.
Hmm.
Um, because a lot of the like for example cybersecurity, cloud infrastructure, like these things are very complex. But people have a very like well refined and understood framework for how to understand Web 2, security infrastructure. And now introduce Web 3. Interestingly enough, we see a lot of businesses, in the mid tier of the industry that uh they have, you know, top tier best in business on the Web 3 security front, and then their Web 2 security is where they're actually lacking. Well, things like access controls or running red teaming, penetration testing, things like that just get skipped past because all the focus is on Web 3. I think the industry's done a lot of maturing on that front, but it show in what the insurers think about. They think about everything Web 2 before they step into Web 3. And, getting people who have a good, clean understanding of that is kind of like what it takes. It takes us a lot of work to help the underwriters understand. And then the other, point on top of that is just there's a significant amount of reputational risk.
Mm,
So, if you get paid, $10 to insure your water bottle, or insure, any water bottles, uh, like you've done this for years, you understand, what could possibly happen, to it, and then somebody gives you like a super high tech robotic water bottle, and it's like, hey, I'll give you $12 to insure this. If something goes wrong, it's not just you have to pay a claim. It's that your organization is going to be looking at you saying like, why did you do this? Like we don't know anything about what goes into that technology. And not to mention, you're carrying with you a decade of baggage and reputational risk, whether that's or like headline risk, where like
mm.
whether right or wrong, whether it's FUD or whether it's, like just the crazy tone of the industry or regulators or what have you, it's still what's in, is in like leadership's minds when they think of crypto. It's just immediately uh, associated and rightfully so with all the uh, unscrupulous activity that's happened in this industry over the years.
Yeah, yeah, for sure. That's a great point. Um, and maybe this is where Glenn, TradFi coming in, the likes of BlackRock and these other institutions, they help legitimize and change some of those headlines and also help establish an infrastructure to prevent the past problems that we've had.
Yeah, absolutely. It's not just, I think there is a little bit of like a misconception, around the large institutions and what level they are on their crypto journey, how expert their knowledge is and what they're doing. The fact is, and we see this in our own systems, like as we've gone through this process with stablecoins, they have such well established controls in place to to be able to prevent a lot of the risks that happens. Like, a lot of bad things that happen are can be subverted by like policies and process that we already like well know and understand. There's usually in the middle of it, in the middle of turmoil, when something goes wrong, there's usually always people at the center who either you know uh like did something nefarious or did something accidental that caused something to break. And what these like big institutions have is, you know, red tape that goes on for days to make sure that these things, don't happen, and they, avoid risk, maintain operational resilience. And so when you apply that, when you start engaging with the industry leaderships and you say, I would, I'm BlackRock. I would love to do this thing with you, but you're going to need to tailor your product to fit my organization. That helps the industry really level up what their offerings are, and I think that's a big cause for the maturity that's happening.
Yeah, for sure. So, Glenn, what's on your roadmap? Obviously, you're working on a lot. I'm assuming there's more testing with the stablecoin payments. Anything else you want to highlight?
On the roadmap, it's going to be difficult to comment on, publicly on what we're looking forward to right now. I can tell you, like the proof of concept that we've been successful in. One of the things that I've learned in being inside of big organizations is that you know you don't need to bite off more than you can chew. There's so many people that need to get involved and understand what's and get comfortable with what's going on. You want to make sure that that the steps that you're taking forward are on sturdy ground, that they're foundational, and they give you a platform to be able to build and set and scale. And this is the beginning of us, increasing like our engagement and our process, the to be able to better meet clients' needs where they're at, and modernize and further modernize like our financial system. So really excited about where we're going to take this next, but unfortunately not going to be able to share too much today.
Well, we'll have to have you back on as things progress and more of your testing and things go into production. It's
Yeah,
exciting
next time we can do it in San Diego. Have you out here?
though. For sure. Would love that. So I have some wrap up questions here for you, Glenn. First, if you could create your own metaverse, what would the theme be?
Oh, that's a great question. I feel like I'm transported back to 2022 right now. I don't know. I feel like, yeah, I feel like something that would be, entertaining for me personally, is to be able to, and some of this is, kind of happening in some types of frameworks, but um, I find a lot of the business behind the business behind sports very interesting. So I think some sort of like metaverse concept that like puts people into the chairs of like GMs and owners and stuff, and letting them do like we see stuff like this already in video games too, but I think it would be an exciting way for people to kind of disassociate with what they normally get to be a part of, and see it from a different lens.
Yeah, for sure. One along those lines, because I'm a big sports fan. I love like the NBA and basketball.
Okay.
Watch football and baseball as well. Uh, I would love if they create a metaverse where I can be fully immersed at a game. Maybe I pay some sort of ticket fee, right? But I could sit courtside. I'm not there, but it could be I could watch the game live in that immersive world.
Well, that would be awesome. Who's your team? Are you a Knicks fan?
I'm a Knicks fan, and I'm hoping this is the year, man, to go to the
Well,
finals.
making a lot of the right moves, man. It's the Garden. It's a magical place when things are rocking. I was on the wrong side of that the other year. Had the whole side talk New York coming at us, Atlanta Hawks fans and Trey Young, a couple years back. But it is a lot of fun when the Knicks are good.
But yeah, for sure. And I'm hoping, yeah, this is the year, but we'll have to wait and see. Rapid fire questions. Favorite food?
Uh, I again from the South, so I'd have to go with barbecue. I like smoking.
Nice. Favorite musician or band?
Grateful Dead.
Favorite movie?
Favorite movie. Not so great with favorites, but I'll go with one recently that really watched on the airplane, made me feel good. The movie The Martian with Matt Damon.
Yeah, that's a good one.
Is something that any type of movie where you're like, man, I'm glad I watched that. I'm in a good mood now. That's what I like.
Yeah, that's a good one. Favorite book?
Uh, this is going to be a stock answer too. One that I always go back to is Atomic Habits, just because I think that it's not just about like it's something that you get better every day, and the more that you kind of like read and practice, like remind yourself um, you know, how you build a successful life and career, how you manage relationships, how you set yourself up for success is always a helpful reminders to revisit.
Mm. And when you're not working, what are you doing for fun?
I'd say probably one of my goals for this year is to be on a board every week. So whether that's skating, surfing, snowboarding, I need to be on a board, and I know that some of it is probably not the best stuff to be doing. Once you get north of 35, but if I can find some way to get out there and take a couple turns, I'm happy.
Well, you're on the right coast for surfing.
That's right.
Glenn, absolute pleasure. I'm looking forward to the future updates around Aon's digital asset adoption. But thank you so much for taking the time.
Yeah, it was a pleasure to be on here and great to meet you, Tony.
Thank you so much for tuning in. Please hit the like button, subscribe if you haven't as yet. If you're listening on a podcast platform such as Spotify or Apple, please follow and leave a 5-star rating. Thank you so much.